Lauren, how big a deal could this be if people find commonality on where they can charge their vehicles, their EVs?
Well, this could be huge. I mean, the Tesla charging system has been the best that's out there. And what's interesting is if you look at Europe, they've been having no charging issues at all because everything's on the same plug. But here in the US, if you purchase a Tesla, the access was to their charging stations. And that was fabulous for those that purchased Teslas. And then everybody else got on board and we had Electrify America and everyone else, but there weren't enough charging stations. So Tesla made a deal with Ford at first. Now General Motors, Stellantis, Hyundai, and so forth down the road. Everybody's jumping on board. And Ford is the first to have access through their Mach-E and their Lightning F-150 truck to charge at a Tesla charging station, which is really good because one of the biggest issues is finding reliable charging, and this may solve some people's problems.
So Tesla has the most charges, right? So that makes it easier there. These other competitive systems, they have their own charging systems, own networks. How much of a game changer would that be for them if those people can go to the Tesla charging stations?
Well, you have to remember that a lot of the charging stations, they come different ways. You can get the level 2 charging, which is going to take sort of about the same as it would at home, and the fast charging, which Tesla has planned for their people. That was part originally that they sold that as part of the car. You bought the car, you got free charging. That's all changed. And now they're building even more charging stations that are Tesla only.
With Tesla's recent plunging stock price, it might be fair to think that everyone is probably selling their shares. But what if I told you that, contrary to that belief, lots of people are actually buying Tesla shares? And these are not just regular investors. Rather, they are big companies, institutional firms that are betting big on Tesla's potential.
The next big catalyst is going to be the affordable car. Unfortunately, that comes in, H2 25. So he doesn't think about things on a day-to-day or month-to-month period, as you probably know very well. He's looking at things from a years, if not decades, perspective. So we're just in between this period of two lulls. Eventually, we'll get this catalyst with this vehicle that'll come out. And there's some long-term tectonic things that people just aren't talking about, which folks like me will start writing reports about and get folks interested eventually.
So, such as?
Energy storage. Nobody's talking about this. This is trillions of dollars of opportunity. Problem is, it's like decades away, potentially. These guys have 15% market share in this business, and the profitability is higher than the profitability of cars. And then, of course, autonomy, right? There's just a lot of negativity in autonomy today. If you guys ever used FSD, I think it's a pretty amazing product. I think it's the most amazing product I've used since the iPhone. We're finally going to get this version 12 this year, which could get the attach rate up. The problem is not enough people have tested this thing. Once you have people test it and the pricing needs to come down, that can change things dramatically. People look at it as a software stock, not just an auto company.
Right. You can sit here and talk about what's on the come, but 25 is a long way away to wait for this new, cheaper model. And so I do wonder what happens in the intervening years at this point to at least keep the stock where it is, if not battle those who say EV sales growth is slowing down. Used car prices for Teslas, for example, are a key indicator that this is not going the way they want it to.
Yeah, you're right. Things could get worse before they get better. There's no doubt about it. My job is to say where this stock will be a year from now, not next week. So, yeah, you're right. And the other issue is, while I think they'll hit the volume target that the sell side has, I don't think it's that aggressive, actually, for 24. I think that'll come from price cutting, which impacts profitability, and that's what everybody worries about. So you're right. Near term, definitely challenging. Elon says it all the time, right? But again, you got to have a broader view of it. And I don't know about you, I can never time this thing, right? So it pops when it pops, right? Somebody like me writes a big report and everybody gets excited, and that's the narrative that changes things. Near term, though, I just don't know what the near-term catalyst is from a data point perspective that re-rates the stock.
What percentage of your valuation model is the core auto business?
10%.
10%?
Yes.
And the rest is energy?
Autonomy and energy.
AI,
mostly autonomy.
Mostly autonomy.
Yeah.
And what about AI robotics? Or
I don't include robotics in there at all.
Because
right.
Because of the risk he might do it elsewhere or something else?
We just don't have any evidence of a product that's out there in the market making money. Energy storage is already making a bunch of money for them. And autonomy, they do have an FSD product, which is really compelling. And they're charging $200 a month for this product.
How about China risk? If, in fact, things really, I mean, TikTok's just one example of tariffs. What may happen a year or two from now?
Yeah, no doubt. It's definitely a risk right now. We saw the Q1 numbers. I think those have to come down on deliveries. A lot of that is China New Year. But look, structurally, it's 40% of their volumes. But at the end of the day, their product that they sell, they do have better profitability than any other car company, maybe besides BYD, right? They should do well long term. And again, auto business, 10% of my valuation, right? It's really an autonomy business and an energy storage business.
Imagine selling at a lemonade stand and suddenly a bunch of fancy cars roll up and important-looking folks in suits start asking for your secret recipe. That's kind of what happens when big investment firms opt to buy a company's shares. These are the kind of firms that manage pension funds and college endowments, and now they have decided to load up on Tesla shares. According to Tesla's new 13F filings, at least 15 institutional firms are buying Tesla shares amidst the current dip, signaling a possible buying opportunity for investors. This is actually a really big deal. But why, you may ask? Well, we're about to break this down bit by bit. So stay with us as we take you through these moments of discovery. Let's dive in.
Told you that I'm bullish on Tesla, and it has nothing to do with EVs. You look at the portfolio of businesses that this company has and the other things in the pipeline that this company has, and there's a whole new reason, a whole new book you can write on why you're bullish Tesla. Like, I'll read them. How about the mega pack that they think by mid 2030s, early 20 or like around 2040 is going to make more money than the cars? How about the power wall? 3 different kinds of power walls, 4 different kinds of charging stations, robotics, robo-taxi, gigafactories, all these other things besides EVs that could be game changing for a company. And my theory on the EVs is Elon Musk is playing a long game to put so much pressure on these other companies that he's going to be the only one left standing. And then there's the China problem with them making too many cars, and they're going to dump them on the rest of the world. So that's a longer play. But all these other parts of their business, the pipeline, they've got 4 or 5 really good businesses within Tesla if you eliminate the cars. Landon?
I agree. I think cars only is a buy on Tesla. I think when you add in everything else that you just talked about, especially, the robotics, I think, it's a longer term play, but that one really gets me excited 5 to 10 years from now. I mean, they could be the world leader in that. It could be, the cars could be a footnote as to what this company does. So cars only, I'm bullish. Add in everything else, then you're really, really talking. I'm very excited. And it's not like this CEO has a problem multitasking. I mean, he can do a lot of different things at once. So I'm not worried about that. And just you can see it in the chart here. I mean, the blue line's people talking about this company and its products. The gray or the lighter line is the stock price. I mean, you shouldn't have them moving away this much without an opportunity. So this is an opportunity in the short term, and then long term, all the things you talked about. So I mean, this is one that I think you can buy the shares and stuff them into your mattress and check back in 5 or 10 years. And I think you'll be really pleased.
Tesla is one of the most shorted stocks in recent times and is currently the worst performer in the S&P 500 this year, down by more than 30% since January. You see, the story of Tesla's decline has been well documented. From safety issues and recalls to slowing growth and price reductions, Tesla has been through it all. Not only that, but a recent report by Wells Fargo analyst Colin Langan offers a darker picture than previously imagined. But what if all these are just temporary challenges? What if Tesla still has a lot of room to grow as a company? Would you still sell your shares? Hello everyone, and welcome back to Tesla Tomorrow. Tesla stock has been struggling for a good part of this year, and it's quite unclear when we'll see a rebound in the stock price. However, those who understand the Tesla business are willing to hold on. Seasoned investors like Dan Ives, Cathie Wood, and Tom Narayan have disclosed that they are buying more Tesla shares despite the dip. Cathie Wood recently bought $35 million in stock, as she believes the stock could soar to $2,000 by 2027. Meanwhile, Dan Ives said that Tesla stock could rebound to $315 soon. And now, big institutional firms like the Royal Bank, Barclays, Winslow, and many others are indirectly saying, time to load up on some Tesla shares. So what does this mean for Tesla? And how will it affect Tesla stock? Let's find out. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. First, it's a vote of confidence. These institutional investors aren't exactly known for throwing money at risky ventures. Instead, they do their homework, analyze the companies, and only invest in what they believe will grow. So if they're lining up to buy Tesla stock, doesn't it mean that they see something special in the company's future? This confidence boost can be a game changer for Tesla, as it can attract even more investors, giving Tesla more cash to work with. With this extra funding, Tesla can invest in new factories, ramp up production of its EVs, or maybe even start another interesting project that's similar to, or even better than the Cybertruck.
Got some data on the Cybertruck. Of course, that's probably getting a lot of talk there. But is this about maybe their lineup of cars getting a little bit of stale? Now, the Cybertruck, it's new, right? But it's going to be an outlier as far as sales. Do they need to come up with a new model here? Because it seems like everybody else is doing that, especially over in China, where they've gotten competition from BYD and others. But now, yesterday, Rivian announced that they're coming out with their R2, and they actually just announced, the CEO just announced that they have over 68,000 reservations for that in under 24 hours. So is competition part of the problem too, along with the hybrid story?
Yeah, I mean, obviously, a world without competition is better, but it doesn't seem to phase Tesla because they seem to always have the best product, and there's always hype for the next best thing out there. But then when the car is actually realized, when it's delivered, you start comparing it, and what we've seen is that Tesla holds up where others are maybe, the hype, it outpaces the reality. So yes, obviously, Rivian, I think they've got a lot of potential. They're also talking about that R3, R3X that they're going to deliver in 2026. And of course, that's going to compete directly with the Cybertruck. But Tesla has shown its ability to dominate the competition. I mean, it's not just like they have the best car. Now they have the best car at a really, really reasonable price. I mean, the numbers that they've got coming out for these cars are just unbelievable. I mean, you can rewind and think about the Roadster when it first came out at like 120, I think, 120,000, and that seemed reasonable because of the 0 to 60 numbers it was putting up and the luxury that it had. And now you've got cars that are as good or better, and they're 40, 50,000. Some of them are in the 30s. So Tesla is showing their ability to not only deliver a great product, but also do it at numbers that competition just can't touch. So I think long term, yeah, there's going to be some competition, but they have such a lead, and they're expanding so quickly. It's going to be very difficult for competition to catch up with them anytime soon.
Since its founding, Tesla has continued to trail the path of innovative technology and will likely do so for as long as it can. This is, no doubt, what has made it stand out amongst other EV companies, placing it in a leading position in the electric vehicle industry with its market spread across different countries globally. The EV maker has a goal of facilitating the world's transition to sustainable energy and has made incredible efforts to achieve this. According to Tesla's CEO, Elon Musk, maximizing the use of technology will help achieve a better future for humanity. The CEO disclosed at an energy conference in Norway that Tesla is set to launch better self-driving features for its cars. Musk believes that Tesla will eventually incorporate the full self-driving feature in its EVs, adding that Tesla's ability to do so is the difference between the company being worth a lot of money or nothing at all. It's not news that Tesla, like many car makers, is struggling to ramp up sales amidst production challenges. And so, with the changing market conditions, it is only expected that investors seek to make decisions that will secure their investment and, if possible, rake in some profits. However, a lot of these investors are not looking at the bigger picture. Some even forget that as much as Tesla is a car company, it is also an artificial intelligence company, as well as an energy company.
Right now, let's talk some stock moves and a few other big mega cap items. including some news on Tesla's pricing. Renita Young's got the story on the Model Ys and some analyst commentary. What's up, Renita?
Well, these shares are rising right now, but depending on what the market wants to focus on today, it could possibly go in the opposite direction because we have two competing storylines here that could produce two completely different outcomes. So Tesla shares up, Model Y prices, the company's going to raise those in Europe, and then we see a price target cut over at Goldman Sachs. Let's first talk about these prices. They're boosting the price of the Model Y in Europe by about 2,000 euros. That's about 2178 US dollars. This will happen on March 22nd. And this comes after Tesla increased the Model Y price over here in the US by about $1,000. They said that, and they're planning to do that on April 1st. Now, here's the interesting thing about the argument of Tesla prices, all of this. Ever since Tesla started playing Russian roulette with its prices, it's changed the relationship between demand, volumes, and margins. Now, initially, the company wanted to cut prices, sacrifice margins for the moment to be able to boost demand and volumes. And that happened for a while, but eventually backfired and ate into profits, as we saw over the last earnings results when the company missed on earnings and revenue. But Goldman is actually seeing sales slow, and that's why the analysts cut the price target on the stock there. That likely means that they're also seeing demand slow. I think that's a fair assumption. Analysts cut their price target on Tesla over at Goldman to $190 from $220 a share, keeping it at a neutral rating. And then they reduced the estimates to better reflect what it believes are both production and market headwinds for Tesla. And analysts say that the delivery estimates suggest Tesla's first quarter volumes could actually be a little bit slower in the first quarter. They're tracking lower than their previous estimate of 475,000. That's why they took down that estimate to about 425,000 for first quarter deliveries. They also brought down the estimate for the full year 2024 deliveries from 2.08 million, which now is to 1.98 million for full year 2024 deliveries. That's their estimate.
We've already talked about the confidence boost and the potential cash injection that this new Tesla shares purchase by institutional investors may cause for the automaker. Now let's unpack what this could mean for your Tesla stock. But buckle up, because things can get a little more technical from here. If you are familiar with the concept of demand and supply, then you probably know that it applies to stocks too. When a lot of people suddenly want the same thing, the price of that item tends to go up. It's basic market mechanics. And this could be good news for your portfolio because your Tesla shares might be worth more in the future. There are also analyst ratings. These big investment firms have research teams who study companies and tell their clients whether to buy, hold, or sell a particular stock. So if a bunch of these analysts start upgrading Tesla to buy, it can trigger even more buying, pushing Tesla's stock price even higher. But here's the twist. Institutional investors aren't exactly known for their YOLO investment strategies. While they might buy a lot of shares now, they might also be quick to sell if they get nervous. So the stock price could be more volatile, zooming up one day and taking a nosedive the next. Also, these institutional investors aren't exactly known for their patience. They expect results and they want it fast. So if Tesla stumbles, or if there's a production delay or a safety issue, then things might get a little messy. And so the pressure to constantly deliver can be immense.
All right, time now to welcome in Renita Young, senior markets correspondent. Now, Renita, you have your eye on Tesla this morning. That stock has just been under a lot of pressure lately. What is the latest?
Well, quickly, last year when we noticed Tesla start to see some demand issues, Elon Musk refused to admit it. So I wonder if today, given the fact that the company's seeing slowing sales growth as well as high competition in China, I wonder if he's willing to admit that demand issues are simply there, because over in China, most recently, we see reports saying saying that the company told its employees in the Shanghai facility to start working 5 days a week instead of 6.5 to cut production of the Model 3 and Model Y vehicles. Now, the staff had not been given a clear update as to when production will ramp back up to normal either. But this is just the latest sign of slowing demand for EVs and slowing demand for Tesla vehicles, especially in China. And even though sales of new energy vehicles rose almost 38% for the first 2 months of this year, Tesla shipments declined in the same period versus a year ago. And the competition for EVs and Tesla is incredibly high. It's some 300 EV makers flooding the market with cheap EVs. And although global sales of EVs are still rising, they are actually slowing. The short answer is because consumers are getting sticker shock in a tight economy. It's a combination of high rates, the more financially conscious consumer, some tax incentives that are drying up right now, and a lot of people who are concerned or skeptical about the whole range of charges. I talked about earlier this week or last week range anxiety, which keeps some people from buying EVs. They're not sure that they'll be able to charge their car enough, and they think that they'll run out of juice before they get to the next charging station. So really interesting combination of things that are really feeding into this slower growth for Tesla vehicles.
What does this signal about the state of the EV market? We have seen, like you mentioned earlier this week, about the issues with regard to range, but meantime, there's been some support on the government side about, kind of the future of EV space. But right now, it seems like a very difficult period for EV makers, and especially when you think about, yes, Tesla's not doing as, like when you compare it to, say, a Rivian, but what's the stock look like for Tesla this year?
Well, the stock for Tesla is really a give and take sort of situation. This stock, it started out the year getting a couple of downgrades just in the first week or so as trading. And right now you can see that shares are lower, and really it's having a bad time. It's one of the worst performers right now in the major indexes overall, not just overall, but definitely within the larger ones.
You see, Tesla's growth is way more than just electric cars. The automaker is figuring out a way to harness energy, store it, and enable people to be productive and fight climate change. Therefore, there's a huge potential for Tesla's renewable energy components to make the company worth trillions in just a few years. Elon Musk has said that while the growth of Tesla's energy business has been limited by supply chain constraints, the plan remains to expand production and deployment faster than vehicle production once the supply chain issues are resolved. So you see why institutional investors aren't letting go of Tesla stock. It's not just about the cars or FSD. Rather, it's about the batteries, superchargers, and even AI. Things that Tesla is now doing and will still do in the future. The only major challenge, however, will be that institutional investor action is a double-edged sword. While it can propel Tesla stock to new heights, it also adds a layer of complexity. Also, it puts a target on Tesla's back, as the automaker will need to keep innovating and delivering, or risk disappointing those who believe in it the most. So while there is a chance to soar to new heights, there's also a chance of investor disappointment because Tesla may still have to navigate a more volatile market. However, overall, we think that the recent event in itself is good, and probably investors just need to look at the bright side of things, which is that when big money buys in, it validates Tesla's potential and could throw gasoline on its growth fire. So buckle up, because the ride for Tesla and Tesla investors is about to get even more interesting. What are your thoughts on this latest buying spree by institutional investors? Let us know what you think in the comment section. If you would like to know more latest updates about Tesla, then go ahead and click on the next video on your screen. See you there.